Hello everyone, this is Matthew Frailey with BreakpointTrades.com, bringing you advanced technical analysis, market commentary, trade ideas, and mechanical systems. And we've been doing this for individual traders, investors, and professional institutions since 2003. Okay, so let's go ahead and get started. So this is a technical review of the markets for Tuesday morning, November 16th, 2021. I'm technically recording this late on Monday. I already sent out my newsletter to our subscribers, and it's by the time this is posted, it's going to be 12 o'clock, 12 a.m. Tuesday morning. So most of you are going to be seeing this on Tuesday. All right. The last video I posted on YouTube was last Thursday, November 11th. So we'll do an update on that. Again, if you haven't done so, go ahead and on YouTube, click subscribe, click the bell icon to be notified whenever we post a video, and either subscribe to Breakpoint Trades or go ahead and just sign up for our free newsletter here right on the website. You can go to the very bottom and free newsletter. Where is it? Right here. I suggest that because I send out free newsletters usually at least once a week. Okay. All right, so let's get back to it. So again, this is a technical review of the markets for Tuesday morning, November 16th, 2021. Here's the table of contents. We're going to be looking at the general market indexes. We're going to keep that pretty simple. We'll also look at just a few indicators, a few sectors. We'll look at commodities, US dollar, precious metals, GDX. I did add a few trade ideas. Here's a few of them: NEGG, GPC, ACVA, etc. And as far as my quick comments here, so Monday was essentially a consolidation day for the markets. So again, no reason to be overcomplicate it. But what I'm seeing here is a possible ABC type scenario on the indexes, on the S&P, IWM, small caps, triple Qs, large caps, where we've had an initial A wave down, a B wave, lower high bounce, and we may need a C wave decline to complete this correction. We have these sort of bear flag looks. All right. Next week is Thanksgiving. Market typically rallies into the month, but usually it gets some consolidation mid-month, and maybe we'll get that this week. Today, what also stood out, the very strong US dollar continues to play out, and 20-year bonds sold off, so long-term rates went up. So let's take a look at what the market did on Monday. So again, the major indexes here: Dow, S&P, NASDAQ, NDX, Russell. Just again, slight down day today with the Russell leading. Again, mostly a consolidation day. As far as the 21 sectors we follow here, again, you can see it was just a consolidation day. Some sectors were slightly up, some were down. Most were less than 1% moves. The exception there was metals and mining, minus 2.25%, and utilities had a strong day, likely because of the bond action, up 1.25%. US dollar, that's a big day, up 0.5%. Euro, of course, declined. I've been showing a head and shoulder pattern on the weekly chart of the euro back to June, and that is playing out very well. Cryptocurrencies got smashed today. And by the way, guys, this table updates around 4:30. So since that time, prices have declined more. I think Bitcoin's right around 61,000 now. Ethereum's come down to the low 4,000 area. What we saw today is the crypto stocks greatly underperformed the respective cryptocurrencies. And the stocks lead generally. And so that was an early warning. We're seeing that big sell-off. Plus, if you recall, Bitcoin, I've been showing that new high that it made the previous week, had a MACD divergence. That's playing out. Here's the commodities today. Kind of a mixed bag, though more positive than negative here. Natural gas, pretty good day. Coffee. Precious metals, gold, silver, again, they were down. The stocks, though, measured via the GDX ETF for the miners, that actually, it was slightly up. And as far as bonds here, both high yield corporate and TLT were down. TLT, that's a big decline. All right. All right, let's go ahead and move on to the charts. So first chart below, here's a daily chart snapshot of the 5 key major indexes: the Dow, the S&P, NASDAQ 100, and Russell here at the bottom. So as you know, recently, a couple weeks ago, they took out these September highs. That was previous resistance. That is now support. We had a rally up over the last couple weeks. Last week, we ended with these doji candlesticks on Monday. We've pulled back. You can see on the Dow, it's in the middle Bollinger Bands, a little bounce. S&P back to this 9 EMA, little bounce. But you can see they look like what essentially could be bear flag type patterns. So that's why it wouldn't surprise me to have maybe this initial decline was a wave A, wave B, and we need a wave C. Something like this. Boom. Because remember, in technical analysis, previous resistance becomes support. So this is a big support area if we were to get down to here, which, you know, I'm thinking we don't go all the way down to here, but, you know, we pull back and then rally. That pullback will be a buying opportunity for the Thanksgiving weekend is my thought, at least for now. Next, let's go ahead and look at some of these indexes individually. So here's the S&P daily. Remember the previous week I talked about this, you know, over a week ago, this technical exhaustion condition on the S&P. It was up within 19 days here. You had 17 up days and only 2 down days. That only occurred 3 times within 50 years. So it argued for a reversion to mean pullback, and we got it. It wasn't much of a pullback. S&P closed a little below its 9-day exponential moving average here, right? And we've bounced here. Like I said, we have a lower high in place, so could this be an A, B, maybe we get another decline, some sort of C, like that, and then rally up. If we were to work our way lower here, remember this week is also options expiration. And plus seasonality tends to be weak. That could be a buy opportunity maybe for a rally into Thanksgiving. Something like that. Maybe like some sort of fourth wave pullback, essentially. Okay, so that's what I favor. Obviously, you know, moving average ribbon is bullishly stacked. It flipped bullish back here. We had that essential large fourth wave correction here in the weak seasonality time frame of the year, the September. It was a perfect zigzag A, B, C, and then rallied right back. So to me, it looks like we're in another one of these ABCs, but to a smaller degree. All right. Let's move on. Here's the 2-hour time frame. Again, you can see, you know, it's the same thing as the daily there. It just shows you the 2-hour. We had this nice inverse head and shoulder pattern that I identified back in early October, and that obviously played out beautifully. These areas, previous resistance, are now support. The first pullback, right around this 46.30 area, you can see we tagged it, became support. We have this lower high so far. If we were to come down, again, this is still support. This is your next support level, that September highs. Here's a 60-minute time frame. Again, we bounced off this support area. Rallied up. One thing I'm going to go over, and I promise, guys, I'm going to do some of these educational videos, but the 60 stochastic, this is a really good guide if you're new to following breakpoint trades. So again, as you know, the standard stochastic length is a 10 length or a 14. All right. I like to also use a 60 length, so it's anywhere from, you know, 5 to 6 times the length of this. So what it gives you some pretty interesting properties when you do that. First off, this 50% area tends to be a very important guide. Okay, when you're uptrending, it'll stay above here, and you can see it was above 80% for a long time. It fell below 80 here, found resistance near 80 on the underside of 80, came down, and it undercut the 50% here just slightly, but it never confirmed a sell. Okay, and there's a whipsaw confirmation method here that I'll discuss on various indicators. Pretty powerful method, but anyway, we'll cover that another time, but now we'll see what happens over the next day or so. You know, is that it? Do we go to new highs here, or do we pull back a little more? We'll see. All right. Either way, I'm expecting next week to be a rally. Next, here's the triple Qs. Again, exact same look as the S&P. We have this initial move down. We have a lower high so far. So could we rally up to another high? We could, or, you know, could could we chop around here and then do that? All right. Again, we'll see what happens tomorrow. Futures right now, as I'm recording, are basically flat. We'll see how they are in the morning on Tuesday. You can see the MACD is basically kissing here. That's what I call a MACD kiss. So this also could be an area where it could try to bounce. Again, all the indexes look basically the same, guys. We're obviously uptrending. We just don't know in the short term, can we just rally straight up or do we need a little consolidation? I'm hoping we get some consolidation because to me, that would be an easy buy. Oh, here's one of the KISS charts for the triple Qs. I had one for the S&P, but I removed it. They're both saying the same thing. Nothing really new here. The ATR is also your big support area. Here's your DVT, higher lows. We've had 5 higher low trailing stops. Moving on to the small caps, IWM, same thing. Now these have more of a, this has more of a bear flag sort of look to me on the daily than the S&P and Qs. You can see it's been holding this 9 EMA here. And again, could it maybe work a little bit lower and then rally? I would prefer that. We'll see if we get that. You can see the moving average ribbon. It's obviously bullishly stacked, but it got a bit wide here. Looking at the smaller time frame, which is a 2-hour view. We did, again, could the correction be over? From last week, it could be. We do have a little zigzag here, which you see, ABC. Tomorrow would be important. You'd want to see, over the next couple of days anyway, you'd want to see price break, say, through this. MACD's healthy, as I said before. We've had a price decline. It's now recycled back to 0. All right. Here's the 60-minute view. Again, we had a perfect little ABC pullback, little bear flag played out. Again, the question is on the daily, is this it? Can it go back to a new high, or does it need to maybe pull back here, chop around? Remember, this is options expiration week. All right, moving on. That does it for the indexes, guys. Here's the VIX. Nothing new here. The VIX, as you know, last week went outside its upper Bollinger Bands, and that ended up being and then closing back inside the Bollinger Bands on Thursday. That was a VIX Bollinger Band buy signal. That ended up working well for the market as the market rallied on Friday. Today was a consolidation day. These VIX Bollinger Band buy signals have been very, very good signals. Okay, I need to add an arrow here, but here's the VVIX indicator. As you know, this indicator is useful when it first is below 110 and pops above 110. It gives you a warning, and that's what it did a couple weeks ago, a week and a half ago back here. And the market did indeed have that little reversion to mean pullback, but it's still above 110 here, but at this time doesn't tell me anything. We need to see it fall back below 110, and then it will reset. Here's the S&P versus high-yield corporate. We still have this divergence in place where the S&P made that higher high. High-yield corporate did not. In fact, high-yield corporate continues to weaken here. All right, notice there's a support here to monitor. Here's high-yield corporate itself, HYG. Again, perfect double top back here, nice pullback. We'll see if this uptrend line can hold. If it doesn't, you could also extend this trend line here, this broken trend line. That could possibly act as a support. If not, you have the 200-day moving average down here. Historically, the markets tend to follow high-yield corporate, but we'll see if that ends up being the case or not. It's definitely been quite weak. Here's TLT 20-year bonds. Again, we had this nice ABC complex correction, rally up. Early last week, we had that spinning top doji, which I stated was set for some sort of pullback. We got the sell-off. So that was a morning star pattern. And we've had a nice decline since. So rates have been going up. Looking at just a few of the sectors, transports, as you know, last week I talked about how they'd come back to this resistance, but I said what you have here is a potential large bullish cup and handle, but it needed a handle. So far we've been pulling back, forming a handle. Again, still could maybe use a little bit more. especially if the index is pulled back again, and then something like that. That would be the best pattern to see. But you could see, logically, we pulled back from that RSI divergence and resistance. Okay? Technology, XOK, very similar look to the triple Qs. Again, is this an ABC type thing where we need maybe a C down, or can we just go right back to the highs? MACD's, you know, in this bullish pinch. So we'll see. I would love a pullback down into here because it'll give me a buying opportunity. XLF financials, this continues to look pretty bullish. Could have this kind of bull flag pattern. I showed this last week. It's still intact, as you can see. Moving average ribbon starting to pinch here now. So energy is building. Utilities today stood out, likely because of the action in the bonds. Nice move there. If you're long bonds here, XLU, you could put a swing stop right at this higher low. I'd say right there. If I'm doing swing trading, I like to put stops at the higher lows. It's a very simplistic method, but it works. Moving on to commodities, DBC, commodity ETF, a little bounce, but it's been in this little correction since the mid-October highs here. So I added a downtrend line here to monitor. Moving average ribbon is still bullishly stacked for now. MACD is simply recycling back to zero. We're not going to look at all the commodities tonight. So here's crude oil, a little bounce off the lows. Again, it's pulled back off this late October highs. This is your big support. We didn't quite get down to there, and the 50-day moving average. So for now, we'll just assume it's in some sort of bullish consolidation before another run up. Moving average ribbon's also starting to pinch here, so energy is building. All right, there we go. Natural gas. As you know, natural gas broke that 50-day moving average last week, and this uptrend line, little bounce today. It's up 4.7%, but, you know, natural gas is pretty volatile. That's a standard move for this volatile ETF. So this is resistance here. On a further rally, this, again, if it rallies up to here, I think that could be a short. This is long-term support. If it gets down into here, I think it would be a low-risk buy. DBA agriculture busted over this sloping trend line. It had kind of a wedge look, but guys, it wasn't really a bearish wedge to me, because bearish wedges, they're going to have more of a slope, and there's hardly any slope here. So we busted right over there on expanding volume. Again, all these commodities are in bull markets. Joe, the coffee ETF, busted out of this coil recently. You can see it's been uptrending all year. Don't show this to Starbucks. They'll raise your latte prices. Well, we all know that. They raise the prices citing higher commodities, but whenever coffee has a nice correction, they never lower it, do they? Corn had a big move. I'm not going to show those. So let's go ahead and move on. So here is Bitcoin. So Bitcoin, guys, last week I was talking about this MACD divergence. You see the MACD divergence while Bitcoin made this new high. So I said that was an area now to take some profits. And it is nice having a nice healthy pullback here as I'm recording this. Okay, the way Bitcoin tends to work, guys, it's best to buy these corrections, and then when you get really extended and you get to divergences, take profits. Okay. Ethereum, big crash here, lost the 20-day, boom. Moving average ribbon's starting to pull in a little bit. Again, guys, momentum was waning. Look at the MACD, got a little divergence setting up here. It started crossing late last week. So nice sell-off there. You know, the 50-day moving average could be the next target perhaps. This would be your first support, I guess, this September high. Here's Bitcoin Cash. Busted out of this coil recently, but it's pulled all the way back here. Now, can it hold this trend line as support? We'll see. But if you're still long some of this, this is really a break point right here. All right, Mara, one of the cryptocurrency stocks, one of the best ones. Look at this crash today, down 20.5%. And, you know, there was some negative news that came out of this one today. So it got hammered closing below its 9 and 20-day moving average. There could be a little support perhaps right here. But otherwise, guys, your next real support basically be September highs here and the 50-day moving average. But all the crypto stocks pulled off their high, had a nice correction today. And remember, guys, the stocks tend to lead. Just like for the precious metals stocks lead the metal. For these cryptos, the stocks lead a lot of times. And so the fact that they sold off this strongly today gave you a little forewarning of the crash on Monday evening. Looking at the US dollar, nice rally up 0.3% today. As you know, it's had this bullish ascending triangle look. Talked about it back here and broke out last week, continues nicely higher. This is your next resistance, basically the June lows. And so dollar looks good. Look at the moving average ribbons. You've had 3 bullish pinches. Remember, whenever it's in a bullish stacking, your pinches are your buy opportunities when you get your consolidations. US dollar ETF, UUP, same picture. It's a little bit cleaner, I think. You can see volume. Again, UUP looks like it's at least going up to here. Now, the positive thing is gold is holding up very well with the dollar rallying. Want to follow up on the euro, FXE. So back in May, June, I showed this head and shoulder pattern on the weekly. It's a slanted head and shoulder pattern, and this sucker is playing out. It's taken all this time. The measured move, measuring the height of the head and shoulder, subtracting it from the neckline, measures down to around 105. And this pattern is playing out. Again, we identified this way back in April, May on our newsletters at Breakpoint. So we gave forewarning of that. Looking at gold. So gold broke out of this coil over a week ago, rallied up, took out this resistance. It's now right at, this little resistance area and downtrend line from January connecting the June highs. The stocks have outperformed, which is what you want to see. This may be an area to look for some consolidation, but volume looks good. Maybe it bull flags here and then tries to rally up. Again, it's holding up very well in face of the strong US dollar. There's all talk. Everyone's talking about inflation. It's all over the news. I'm not going to go over all that, but that's what helping gold. Gold on the weekly. Last week it broke its weekly downtrend line, which was positive. Now on a nice pullback correction, if we get one, you want to see this broken trend line as the support. Okay, what you don't want to see is gold lose that broken trend line. Okay, but for now, looks pretty good. Silver had this, inverse head and shoulder pattern. Now, for now, though, it's stalling a little bit at the 200-day moving average, which is to be expected. Platinum, I haven't shown that for a while, but I showed that back in October when it broke the downtrend line here. It's been working its way higher near the 200-day moving average. You can see how the moving average ribbon went bearishly stacked back there in May. It flipped here in early October. You can see how useful these moving average ribbons, guys, are. Very simple, but very effective to see them in that way, instead of simply the moving averages right on price. That's why I like to have them separate. GDX, the gold miners ETF, again, a lot of the individual stocks had these inverse head and shoulder type patterns. We identified the higher lows a couple weeks ago as low risk buy opportunities. I'm not going to go through those, but if you bought a couple weeks ago, you have a nice swing long going on at the moment. GDXJ is another one of these ETFs. This one focuses on the junior stocks. And let's go ahead and follow up with trade ideas, guys. So last week, these are some of the long ideas. NEE, it's an energy stock. It was on our watch list. Right when it was here, I drew a downtrend line. It was a bull flagging with a 920 MA squeeze. It's had a nice pop on Friday and today. Nice trade. Congrats if you took it. By the way, on a trade like this, my initial stop, if I bought that trend line break, would be right there. Okay. And at this point, I would be taking some profits. That's the way I like to do it. ExxonMobil, I mentioned that this one a couple weeks ago had a dividend. You can see today pulled back, held that previous resistance as support. CVX, Chevron's got a big dividend coming this week. Nice pop today. There's the energy area. Boeing, perfect example of a double bottom. I talked about this a couple weeks ago, this double bottom, low risk long with a stop right there. And if you've held it and stayed patient, you're rewarded today. Look at that volume break. Now, I bought it. Let's say you bought it down here. My initial stop would have been here, and then I moved to each higher low. My stop on trailing is moved to there, then to here. Okay? So you just effectively continue to move your stops on any trailing piece to each new successive higher low. That'll keep you in the position for as long as possible. UPST was a short idea of ours, head and shoulder pattern that broke down last week. Today it's hitting its measured move from the height of the pattern. Tesla's been all over the place lately. Again, guys, Tesla, just has had a phenomenal run from, especially if you bought it here in the summer. It was a slow and steady move, and then it just went parabolic. You had a black candle. These black candles are often mark tops or bottoms. You can see black candles back here. They're very useful candlestick pattern. The price was so far away from its 9 EMA, your mean. You had divergence on the RSI 5 and 14 links. Look at your moving average ribbon. Remember I say when it's pinched, energy is built up. When the moving average ribbons get too wide, you do for consolidation. And that's what happened. All right. We still have this open gap at 910, which still could be a target over time. Here's the 60-minute time frame. You can see that open gap. I have a buy limit at 914, something like that, 913, because just in case it doesn't completely fill the gap or it gets close, I want to make sure I get some position. But guys, again, to me, this was an easy trade to get out of some of your Tesla if you needed to. You had a nice MACD divergence on the 60-minute time frame. When the initial sell-off, you broke symmetry, 111 points down. That was larger than these two sell-offs. When you get a symmetry break, that tells you with high odds certainty you're going to form a lower high, which you did here. So far, we had a little ABC bounce, down move today. Still didn't fill that gap, but we're going to still continue to monitor that. Lucid, which was one of our long ideas back in late October with his really long base. By the way, this is one of those superstar patterns. I talk about trade ideas that, this is a weird, maybe a weird analogy, guys, but let's say you're in a bar and you see a girl and you're like, she's cute, she's cute, she's cute. And then some girl walks by that you're like, that just knocks you back. Like, oh my God, just amazing. That's how trade ideas are. You see your average setups, and then once in a while you see one of these unbelievable setups that just set you back. And that's what this one is, Lucid, when it had this long trend line. When I see a setup like that, and something like that only comes after you've seen thousands of charts, guys. You've calibrated your mind. You've kind of learned what really looks good. So this is one of those setups that was just a superstar look. So when I see a setup like this, I'll buy a larger position than I normally would. That was a great trend line break on good volume. Where did my initial stop go when I bought this? Just a little below the trend line, very tight. And then take some initial profits, move your stop up to each new higher low. Here's NVIDIA, same deal. It was a great pattern with this coil break, went parabolic, was time to take profits. Maybe you have to stop right there. It's keep it tight. Airbnb, which was a long setup of ours, ascending triangle, played out beautifully. Taking some profits last week. And if you still have some shares, that could be a swing stop area. Now note, we do have some RSI divergence. COGT was another one of those superstar patterns. Talked about this one last week on Thursday, and then it broke out on, well, I talked about this on Wednesday. It broke out on Thursday. And right now it's consolidating. I still own a little bit of this, guys. My style is to take some initial profits on the first move. But to me, this pattern looks good, especially if it pulls back. I'll probably add to my position. This I now expect to be support. That's resistance. And this sort of inverse head and shoulder pattern does measure up over time, maybe to around 13, 14 bucks as a target. RGS, long idea from last week, broke out on Friday. Increasing volume, a little bounce here. Nice base. I like seeing that. Here's some new setups, guys. GPC, simple resistance breakout, 137.15. NEGG, nice little pattern, quite volatile. Clean resistance at 1985. It needs to clear that. ACVA, coil pattern. If you go long here, a swing stop could be right at that higher low. SPGI, falling wedge, good volume patterns. Need to clear this, but looks good. Sort of an ABC correction right now. Info, another ABC correction. This technically would have been, I would have bought this today if I had seen it. Moving average ribbon pinch, but it's still, technically if this is an ABC complete pattern, it should make a new high. So I'll be looking for a trigger intraday. VIAV, little 60-minute chart. Maybe if it can clear this area on some volume, I'll buy it long. APEN, clean resistance around this 10 area. AFL, another resistance, sort of a cup and handle, not exactly. HWM, nice move up. Pull back to the moving averages. Big volume today. I would possibly buy this over today's highs for a trade. Peloton has been absolutely destroyed, as you know. But, guys, I'm going to show you something. I'm going to do a video series on this someday. So, it's been downtrending for quite a while. It gapped down on earnings, and it's continues selling off. It is getting quite stretched. To me, this is a bounce candidate. Not a swing trade, but a bounce candidate for a trade. Notice the CCI indicator spiked below negative 400. That's kind of rare on this gap. And it's been moving higher while prices moved lower. So we have a technical divergence. So it's getting very, very stretched, due for some sort of reversion to mean back bounce, at least back to the 9 EMA for a trade. All right. Now, I would prefer to see a doji candlestick to trigger off of. But let me show you some examples of this setup. I call it the CCI bungee trade. So here's an example of the past, FCFS. So CCI spiked below negative 300 down here. The stock continued lower. CCI worked higher. So you got a positive divergence set up. And so your trigger was when you had a doji candlestick, buying the high of this doji, setting the initial stop right here. So a tight stop with at least a trade in the 9 EMA, and you can see that worked out. Looking at one more example. This is the final chart, by the way, GLT. So here's an example of one that's set up twice. Your CCI spiked down to negative 400 back here. Price worked lower, and you had a little doji trigger. Now this one, you had to give it some patience, but that was the low, and it worked higher over time. Then you had another spike, the CCI down here, negative 400. Again, I don't buy that spike because what I want to see is price go lower than that while CCI goes higher. So you form your divergence. You got your long trigger over the high of this doji with the initial stop at the low there, and that ended up being a fantastic trade. So we'll see if Peloton can, form something like that. Ideally, I'd like to see a doji because I like these, whenever it sets these dojis, those give you your nice reversion to mean triggers with tight stops. All right, guys, that does it. We'll see how Tuesday plays out. Again, this video is being recorded right around 12:30 Eastern on Monday. Well, technically Tuesday early morning right now. So Good morning, everyone, on Tuesday, and we'll see what happens today. I'm going to go to bed. Take care.